Welcome to the Trading Lounge, and here we're looking at the US 30 on a daily chart, and as you can see we're looking at those that top of that third wave here which we've been looking for. One of the things is that the third wave is normally longer than the wave one, and that's not the case so far. It's still a little bit short, so you can see that it's quite sort of swift in relationship to this structure here. So yeah, look, we can look at it moving further up, but we're counting the 5 waves from this wave 2 low here up to this wave 3 here, but it's likely to extend because it's a third wave, and as pointed out that it needs to be longer than wave 1 here, so there's more to go. This is what we're searching for in most markets, in fact. So but once that's finished, there'll be a wave 4 and then a wave 5 to go up, and the wave 5 going up will be about the same length as wave 1 here if the wave 3 has got the extension in it, and the extension is normally let's say the length of wave 1 plus 61.8, another 60%, so it's somewhere in there, you know. So that's what we're looking for here. A little bit like this here, we've got wave 1 here and wave 2 here, then wave 3 is all this long one here, you know. I'm not saying that's going to be the case, because normally wave 5 in a market has less volume in it than the wave 3 as such. But anyway, we'll see how we go with that. But yeah, so just drilling into that situation a little bit here. We've got this from this low here, we've got the wave 1, the wave 2 here, and we've been counting the wave 3 up through here. And as I mentioned, that you know, this wave 1 here and wave 3 needs to be shorter, so you know it can extend up further as such as 1, 2, 3, 4 and 5 before we get this fourth wave there. I'm just leaving the fourth wave there because this is really the first high above the medium level, 15,000 through here, and when a market is making its first high above a level, it normally stays within the group 1, and group 1 is all of this really, is the 100, 200 and 300 through here. So anyway, we'll just see. It's still, there's no signs of it slowing down just yet. So, but we can expect, day traders can expect a corrective pattern around the 15,100, the first minor level here. So expect some type of 3-wave correction here, and after that, if it finds support on the 100, then you can go long from that point. And as the Dow always works, not always, but you know, 90+% always works to each 100 points, then you know, you trade to those, and of course use the sub levels in between that as well. Another point that I wanted to make, this is just a 30-minute chart here. When you're using Elliott, when the structures are when the corrective structures are going sideways like this, when they're not pulling back in terms of price, it means that they're actually stronger. They're just killing time basically and going sideways, and normally the distance sideways is normally the distance to the upside there. But the main point that I want to make here is that these corrections are sideways, and that means that the trend up is still building. If those when those corrections start to turn sharp, yeah, then it's slowing down. You know, obviously there's more profit taking coming in at that stage. This is more building the trend in what they call accumulation process, and obviously the distribution also occurs through the trend as well. But it's the sharp corrections that we'll be looking for, and they will be the personality / signals that the trend is weakening. Of course, this is the same for the S&P 500 as well, just tracking the 1, the 2 and the third wave up through here. And you know, it may only be the same size as the first wave as well. It's something that we need to bear in mind. with the S&P 500 here. The 1630 is a critical price point because support found on here will take the price to the number 5. So 3 goes to 5. Yeah, so that's what you'd be looking for there as well. Let's see how we deal with that. This from this little structure that we're chasing here, we've got 1, 2, 3, 4, 5 here. So if I just drill into that, but it's still definitely in the trend channel, and the 1650 is actually a medium level, so it'll carry a bit of weight there. So just drilling into that a little bit there. This is the wave count on the 30-minute chart: the 1, the 2, the 3, the 4 here, and the 5 coming up through here. This could extend up here further, but look, just expect some type of correctional pattern across the 1630 there. It'll be familiar, like these guys here, one of them. But once it's done some type of correction, once support is built on it, then you can scale in 31, 32, and 33. If you get support on 33, then you can naturally go higher to 35 at that point. So it depends on the degree of structure that you're trading, but yeah, further upside there. That's the same in Europe as well. Still moving to the upside with the FTSE. And I just wanted to point out in the FTSE here too, if I can just go to the daily chart here. This is just the monthly chart here. And in this monthly chart here, just wanted to point out that from this 2000, 2007 and 8 high there, and coming into now at 6600 here, there will be some sort of intraday sort of reaction there, but the DAX and the rest of the markets have actually moved through this, so we can expect the FTSE to do this as well. So still further upside to come through here. So it's still long there as well. Okay, so coming into Australia. Before we go into Australia, I just want to go and have a look at the Shanghai market. So just bear with me so I get that set up. I did that on pause. So look, what we've been looking at through here is, this is obviously important, for the Asian region as such. So we were looking at this being basically an A, B, C correction through here, okay, in 3 waves. So that's how it pans out as such. And this move down through here being the C wave, and an A, B, and a C for the A wave, the B wave in 3 waves, all well, and the C wave moving down through here in 5 waves, as a C wave does. And that goes to there and there and there. So we've done a good job of counting all this down through here, and even in this last section down through here, there will be 5 waves in that as well, and that's been the case. That little one there, that one. I know it's a bit squashy, but we're in a small space here. So anyway, it finished there, and we counted that down, and we nailed that low there. But what I wanted to point out here is that we can see that as this has moved up through here, we've had increasing volume through here. Okay, so that's what you'd expect in a trend. And in a correction, and this is what we consider this here, as a correction coming down here, we can see that the volume has been diminishing through here. Okay, so we're getting less volume in the downtrend, so it means that there's no sellers there, but it also means that it's a buying sort of opportunity, really. Well, a sign of strength that the trend is changing. And now you can see that in here we're starting to get support in here. So we've basically been talking about over all this period here of finding a low within here, and we've also been looking at the the Fibonacci retracement level in here being between the 50 and the 60 in that sort of area, so that squares up kind of nicely. So if this is right, then we would expect new highs above this one here. Now it may not come that simply. We may end up with something like a structure up to there, and then then another structure down through to here or something, and and then push up through here. I mean, I don't know. You know, that's what I don't know that. But I do know that there's a reasonable chance of having a low in here through not only the price action in terms of patterns through here in understanding this and this, but also being confirmed with the volume. And the importance of that for the Australian market, of course, is that you know, a healthy market over there is a healthy country, and that's healthy for our resources. And that particular bounce that we're seeing off BHP and you know, Rio, the material sector, you know, we're treating it as a rally, but I'm also mindful that it can develop into more of an impulse wave. So if we were being a sort of contrarian, then you know, it would be certainly the time to buy. And you know, we've been looking at that and you know, mentioning to get a few positions on that low there. So you know, we could be getting more of a bounce than one would expect, and we'll look at that in a moment. But I just want to go to the Australian indices here, the cash CFD, so to speak. Now, we had been looking at, you know, studying, we knew had a top of a third wave here. It took us a little while to get through to the fourth wave, and they're just tricky little suckers at times. But look, there it is. And this move up through here, when you look at the volume on the daily cash market, there's been increasing volume to the upside through here. So definitely confirming that wave 4 is completed through lower volume here and higher volume through here. So we're looking up for wave 5 now. I can see this count, I can get it reasonably well here, the count, but the main point is that we're looking for support on 5.2, and we've kind of got it already through the classic trading levels pattern, which is the arrival, the reaction, the support, and then the first high above the level. And that's what we're looking for now. We're looking for the first high above the level, and then we'll see another correction through here. So we want to basically see a correction here, or at least a stronger retest of the 5.2. That's to get us to the 5.3, so to speak. The other point that I wanted to make here is that yes, we are looking for wave 5 here, but of wave 3 here. Okay. So if I just take, so there's still more to go to the upside, so we'll be looking for a wave 4 and then a wave 5 up. So in looking at that, if I just start back here, we were looking, when we first arrived here at the 5,000, we were looking at this corrective pattern here, and then we had this as the A wave up to this point here, but this now needs to be put as wave 1 here and wave 2 back to here. And it's true that you could count this as wave 1, and this is an A and a B and a C here as well. But I think that looking at the US markets is that we need to put that wave 2, leave that wave 2 there, and then this is the wave 3 that we're tracking up now. So in wave 3 going up through here, we're looking at 5 waves, the 1, the 2, and then all the way up for the 3 here that we've just been looking at, the 4 and the 5 up here for 3. And then we're looking at a 4 and a 5 to take us up. I mean, the 61.8 retracement level is up at 5.4. So, you know, but what we'll do is we'll just keep trading the levels up, and we'll keep looking at the internal structure and keeping an eye on the rest of the world. Let's have a look at the commodities. Okay, starting with oil, and we were looking for a bit of a top in oil, but we're also mindful that while the 95 here is support, then we need to treat that with respect and so forth. So we need to start looking at this as a corrective wave 4 here, and looking for a new high here into the 98 and possibly into the 100 here. The other day we had a look at the Amex oil energy index here, and in fact we're looking at it on a daily chart. This is a weekly chart here, and this is quite a long time frame situation here, but we're looking at this little corrective pattern in through here on the daily chart here. I don't know if you remember this. but you know, we could see that we had a three-wave price action through here, so we were looking at this top being taken out, and that's been taken out there. So you know, there is that still strong energy market as such, so we can still expect this to move up. So being long, you know, off some price point here, the 96.50 and so forth, but expecting new highs here. The copper market is still pushing higher, and as we mentioned yesterday, you know, we had this as a wave 3 here, but we moved it over to here when I could see that this was still corrective in here, and now we're looking for this little wave 5 to go up here, which I can see that is in 5 waves, so a little bit dodgy, but the 1, the 2, the strong third wave is in through here, the 4th, and we'll get the 5th up here a bit higher, but obviously it will run into resistance at the next whole number here, the 340. So we can expect to move up through here. So we can still expect more upside there as well, and then a correction from that point there. Now the gold markets, this is because the US dollar is actually kicked lower. Just we'll look at this in a moment on the FX thing, but the US dollar has moved down, which allows the commodity markets to move up. But this move down through here, is we're still treating this as a bullish market through here in terms of this being a 5-wave structure to the upside here. But we'll talk about that in a moment. But the reason for these moving higher is the US dollar moving back. So with that in mind here, looking at the gold market, we can see that we really needed that 144. The one, it's 1440, but I see it in geometry terms as 144, which is probably the only number that Gann and Elliott meet at, Gann and Fibonacci rather, but you know, there's not much difference between all their numbers anyway, so when you look at them closely. Look, what we do recognize here though is that because this has moved up through here, this move here is in 3 waves, so that's corrective, so that means that top will be taken out there. There's different ways of counting this whole structure through here, but we're still counting it as corrective, but we're still expecting a retest of the 1500 through here. So this is on a 4-hour chart, so you know, you can see that's quite strong there, so you can start looking at that in a 5-wave structure to the upside there, and that can give you a trade there. It's the same with silver as well, but you would need support. Silver's a bit sluggish, so you'd need support on the 2400 there, $24, depending on if you're trading, you know, minis or whatever. So yeah, that's that. So that will be firmer there as well. Right, let's have a look at FX. Okay, the US dollar through here, we're still keeping the same wave count through here in terms of the A wave, the B wave, and the C wave, and then we're looking at this being up for wave 1 here, and then we're looking for, well, the A, the B wave, and then we thought that the C wave was going to be short here, and we may be pushing up through there, and we're looking for 5 waves in this structure up through here, but it just didn't deliver the 5th wave to give us that little high there, so we have to count this as the C wave coming down through here, and there may be one more little push to the downside here before that actually completes there in terms of C waves are in 5 waves, the 1, 2, 3, 4, and 5 to here before we see that push to the upside. So let's just allow that to play out somewhat. The 82 is really quite important as well. The market is above 80, so we treat it as being sort of positive. But if the 82 here becomes the retested resistance and it fails from that point, then it's basically we've got to look at the price coming back down to 80 as well. I know that the 81 is quite important as well. It's a 61.8 retracement level on a larger picture on the daily chart. But look, just in a bit of a nutshell, if that 82 becomes the resistance, then this market becomes a bigger bearish pattern down through here. But as it stands at the moment, we do have a nice 3-wave structure here. We do have a 5-wave structure up through here, a little bit dodgy, but it's there. and we are looking at this as being an ABC structure through here. So we just need to allow it to play out. But once it's played out, then we do need to see support on the 82 there. That's critical. It's critical because our wave count on the euro is to the downside. So when we're looking at the euro here, it's basically the A, the B, and the C rally here exactly opposite of what we're just looking at the dollar here. So we were looking to see if we can get a short from the 103.72 here. If that was going to be the case, we knew that this would come down through to here. There would be a retest to here, and then we were looking for a move down and the 72 to lock in there as the resistance for the short trade. But that's not the case. Things just got bigger. So we need to run with that. Of course, if as a trader, you would be looking at that retested support on the 131 there to go long, and also on the 13130, the top of group 1 there as well. So this structure up here, you need to count 5 waves in that. That's why I mentioned there may be another one more push up through to here before we see the top of wave C, which would be the wave 2 there as well. And then we'd see it roll over from that point. Of course, if the market did push up through here and then we've got some type of correction here and then support on the 132, well, then we're wrong at that point and we need to go long from that point there as well. The Elliott is important and very helpful in determining a direction and wave structure and the beginning and the middle and end of a structure. But when it comes to trading, we trade from a particular price point that's been tested, and if you can get the volume, then that will confirm the price action from that point. So realistically we need this to play out. It is a bit of a concern to me really, because the 130 here is the top of group 1. Okay, so if I can just bring up an older chart through to here, so this will do for the time being. This 130 here is the top of group 1. So normally when I'm looking at something, well, when I'm always looking at something, is that support on the top of group 1, and then this is minor group 1. So then it just simply creates the long trade from this point. So what we've got here is that we've got a bearish wave count occurring, but we're sitting on top of group 1. So it's not, you wouldn't normally trade short unless the 130 was the retested resistance from here. So you would be looking for long trades above this level here, and that's why going long on the 131 would be proper, and going long on the 132 would be proper as well. But we'll allow this to play out, and we'll look at it. But support up through here, and obviously making new highs here. This market is going higher from that point there. So this is something to bear in mind. Yeah, I mean, I always use the levels as a trade point. It's always kept me much safer than just relying on Elliott alone. The Australian dollar and its wave count are on track as such. Just a slight little change in through here. We're looking for, yesterday we were looking for wave 4 there, but we do have a little 5-wave structure down through here, so I've got to call that in as wave 3 here, and this is wave 4 through here, and we'll be looking for wave 5 to the downside. This can also be counted slightly differently as well, in terms of having this actually down as a wave 1 to here and a wave 2 to come back through here. But I'll just leave this down here at the time being. The main point here, though, is that this next trade setup would be from the 101.72 there. Now, if on the 5-minute chart, when you get around to it, if this doesn't, if you can't recognize what a failed retest is, then you can look at, once that's retested properly there, then you can use the 65 here as a retested thing and put the stop above the 72 there, and then trade down to the down to the midpoint there, and you'd be looking at counting 5 waves down, the 1, the 2, and the third wave down, the fourth and the fifth wave. This has still got further to go down through here, and we're looking at it coming down to the 1. Of course, when we're talking about the 1 here, we also need to bring in the first level below that of the next degree smaller. Well, not so much but the minor level, which would be 98, which would be down through here. So would need the commodities to continue to roll over at that point through there, but we do have that China market strengthening as well, so we need to be mindful of that. But as mentioned, coming into Group 1, the 103, 102 and 101 is going to be a bumpy ride through here, but the wave count is still definitely to the downside, and as we mentioned yesterday, the trend line through here, the wave 4 always breaks the trend line, so that's what's occurring through here at the moment, and we should see new lows in due course here, but you'll need to trade off these two numbers through here. Just a little announcement, some good news and bad news. The bad news first is that there won't be any Elliott charts on the Elliott wave section for the Forex for Thursday and Friday. The good news is that we'll put another tab on there, and we're going to start putting other charts on there. So it may be the NZ cross with the US dollar, or whatever we feel that is appropriate to for trading opportunities there. So there's just going to be another tab. I don't know what we'll call it. We'll call it the other tab or something. But it will have a whole lot of mixed FX charts in there, and that will start from Tuesday. Okay. Is that everything? I think so. Right. Alrighty. Well, that's it. So continue to trade long on the indices and the stocks. Thursday, I know it's sort of bullish there, but Thursday can open higher and trade lower. Okay, so just be mindful of that. Thursday is normally a day for taking out stops. It's a bit hard to see when the US markets are up strongly and so forth, but just be mindful of that. If it occurs, at least you know what's happening, and then what you need to look for is the any move down. Will it be on lower volume? Initially, the first sort of hour or two would be quite swift to the downside because it triggers stops out. But beyond that, it should slow down as such, and there is more upside after that. If we're up, well then we're up, and our stops are safe. Alrighty, well, good morning and good luck, and enjoy the day ahead.